Welcome back to Next Gen Investing. It's now time for FOMO, and unlike traditional FOMO segments today, we're just FOMOing the entire software space following this note out of Jefferies, which was not overwhelmingly optimistic on these U.S. tech heavyweights, namely Alphabet, Amazon, Meta, and Microsoft. So joining us now to discuss more on this note and the breakdown on all these individual names is Caroline Woods, Senior Markets Correspondent for the network. So Caroline, walk us through this update, because it was not fairly positive. I know that he still has a buy, so I'm a bit mixed here. So walk us through your thinking.
Hey there, Jenny. Yes, still positive on Alphabet, Amazon, Meta, and Microsoft, as you said, all of which are lower today, but scaling back his price targets on the names. So still, the new price targets represent considerable upside from current levels, especially given the year-to-date declines that we've been seeing, but not quite as high as they once were. So this is a Jefferies analyst, as you said. He's scaling back those price targets on the Mag 7 names that we talked about in the U.S. software space, basically to reflect multiple compression and amidst a softening macro environment that he thinks could impact some tech deal decisions moving forward. So it's interesting. The analyst said, we may have another mullet year in software. He says, with first half chop followed by second half flow. So I thought that was pretty kitschy there. In turn, cut price targets on Alphabet to $200 from $235, Amazon to $250 from $275, Meta Platforms to $725 from $810, and then Microsoft to $500 from $550 a share, but did keep buy ratings on all of these names. So as I said, still upside from current levels, just a little less so than previous. If you take a look, Meta is faring the best of that bunch of four so far this year, but still is lower year to date, down a little more than 2% year to date. Has the most impressive one-year chart, though, up 18%. Google, Alphabet is faring the worst year to date with about 19% decline so far in 2025. Microsoft, of the four, has the worst one-year chart, though. Microsoft share is down about 12% over the past 1 year. The Jefferies analyst didn't lower estimates on those four names just yet. He's waiting for first quarter checks, but noted that guidance levels were set for no material improvement and said ongoing uncertainty means investors are waiting on the sidelines to assess the impact. So should note, it's not just Jefferies weighing in on the Mag 7, those names today. We also saw Bank of America actually reiterate Meta and Alphabet as buys because of less impact from tariffs, actually, saying while the entire sector has tariff exposure, we expect large cap online media platforms to hold up better given less relative brand exposure and or more robust advertiser auctions. We also saw an interesting note from Mullet Research out about Alphabet, actually, warning that if it doesn't integrate AI into its search function better, it could end up like Eastman Kodak, saying Alphabet is down 25% from recent highs and is still cheap for a reason. Google's AI summaries sitting atop searches do not meet the bar set by OpenAI in simplicity. And I will say Google is still my verb of choice, but this analyst says how many kids say they'll give Gemini their research paper? Kids make ChatGPT their home screen and just use it to find answers with no noise from annoying ads. So did warn that advertising revenue could take a hit by the end of 2026. So taking a bit more cautious of an approach for Alphabet with a hold rating and a 173 price target, which implies about still almost $20 upside from current levels. So on the whole, still for the most part, pretty bullish calls in terms of the price targets that we've been seeing, although Mullet is definitely taking the most cautious approach as it relates to Alphabet.
You know, Caroline, that was going to be my question, but you kind of answered it already, which is this sentiment, this mullet sentiment, starting to become the consensus? And I think what I'm learning is that you got to be like a creative writer as well to be an analyst in 2025. But I will tip my hat to the team at Jefferies. They got a chuckle out of me, and I'll probably remember it now because of that. But this idea of sort of short-term uncertainty remaining, at least for the foreseeable future, but then as things work their way out, multiples compress, maybe a better second half of the year, is that kind of the general sentiment? I mean, I was looking at Amazon. There's 95% of these analysts are still in buy rating. There's a lot of revaluing that could happen if things really start to get ugly in this market.
Yeah, and there's it's not just Amazon. Of the four names we talked about, Amazon, Microsoft, 93% rated as a buy rating. The median price target, $500 a share, implies 35% upside. Alphabet, 79% buy, median price target 220, more than 40% upside. And then Meta, almost 80% buy, median price target implies about 35% upside. So I would say yes, it seems like the consensus, mostly because a lot of these analysts have been wrong, and they've said, even the Dan Ives of the world, who obviously we talk about quite often on this network, he's obviously a big tech bull, has said, I've been wrong, so far this year, but my medium to longer term view is these stocks still have this room to run. And based on these ratings and the price targets that are 12 months, obviously the majority of analysts on Wall Street share that bullish sentiment. But given the uncertainty that we've seen in the market, and really just the fact that big tech has been out of favor so far this year, it seems like, given many reasons that they talked about just from these analysts alone, there are reasons that there could be headwinds and more uncertainty in the nearer term, but longer term, they think that these are opportunities to buy, and that there's room to run to the upside, and quite a bit of room to run to the upside, given how sharply many of these names have fallen off.
Yeah, it is very interesting because a lot of these, I feel like we oftentimes group the entire, the Mag 7 trade together. They're all so different. I mean, they all have such different drivers, but is this the kind of thing where we're just looking for the next wave of momentum that it could be one of these rising tide lifts all boats, or it could be we see some of these names emerge as the leaders. Like you mentioned, Gemini right now being somewhat replaced with a ChatGPT type scenario. I mean, are there clear now favorites among the street analysts? Because I don't like necessarily just grouping them all together because, again, they're so different.
Well, and that's the thing. We're still calling them the Magnificent Seven. I've been joking the Magnificent Eight because of Netflix in there, and Netflix is actually the only one that's higher so far in 2025. And the performance certainly hasn't been magnificent in 2025, but even if you take a look at the one-year charts, like I was saying, they're actually getting, not all that impressive either outside of Meta, which is up almost 20% over the past 1 year. So it's hard to say in terms of, obviously each name has its own particular, headwinds and tailwinds, but I guess time will tell if we continue to clump them together. If we use history as a guide, it has changed a bit. Remember, we used to say FANG, and then there was Magnificent Seven. So let's see how this year progresses. Maybe we'll start talking about a different group, or maybe there'll be some losers. I have seen, I can't remember which analysts call it the Mag 6 because they've eliminated Tesla from that. So I mean, there's already some variations going on, but I guess it's a safe answer. But really, time will tell based on this year. I think if this year continues the way it's going, I don't think we'll be calling them the Magnificent Seven anymore.
Yeah, they have been fairly unmagnificent, and anyone talking about them as much as we do, it's just the narrative has not really even changed. Just another day of pressure, unfortunately, for our less magnificent seven group of stocks. But we so appreciate it, as always. Caroline Woods, Senior Markets Correspondent for the network.